Bitcoin is falling off a cliff, and here's what you should do. Bitcoin has experienced a tremendous amount of volatility in the past few years, with its price plummeting from a high of nearly $20,000 in December 2017 to a low of less than $4,000 in December 2018. This is due to a variety of factors, such as the proliferation of alternative cryptocurrencies, the presence of fraudulent activities on the Bitcoin network, and the lack of regulatory oversight. So, if you're looking to invest your money, where should you put it? Well, there are a few options. One is investing in stocks, bonds, and mutual funds. These are all typically more stable investments, and the returns can be quite good if you make the right choices. Another option is to invest in real estate, which can also provide good returns, although it is a bit riskier. Finally, you could invest in a cryptocurrency, such as Ethereum or Litecoin, which have had much more stability than Bitcoin in recent years. Another option is investing in alternative assets, such as commodities, precious metals, and collectibles. Investing in commodities, such as oil and gas, can be a great way to diversify your portfolio and hedge against inflation. Investing in precious metals, such as gold and silver, can also be beneficial, as these are traditionally seen as safe havens in times of economic turmoil. Finally, investing in collectibles, such as art and antiques, can also be a great option, as these can appreciate in value over time. Another option is investing in cryptocurrencies, such as Ethereum and Litecoin. These are both seen as more stable than Bitcoin and have experienced much less volatility in recent years. Additionally, they have a much larger user base and are much more widely accepted than Bitcoin. Finally, investing in initial coin offerings, ECOs, can also be a great way to get in on the ground floor of a new cryptocurrency project. If you're looking for a more hands-off approach to investing, you could consider putting your money into an index fund, ETF, or robo-advisor. Index funds and ETFs are a great way to invest because they provide instant diversification across a variety of different asset classes. Robo-advisors can also be a great option, as they provide automated investing strategies tailored to your individual financial goals. All of these options can be a great way to get started with investing without putting too much of your own time into it. No matter what you choose to invest in, it's important to do your research and understand the risks before putting your money in. Investing is not a get-rich-quick scheme and can take time to yield results. With that in mind, it's important to be patient, do your due diligence, and make sure you're comfortable with the risks before investing. It's also important to have a plan for your investments and to have a long-term strategy. This could mean setting a goal for when you want to achieve a certain return, or it could mean diversifying your investments across different asset classes to reduce risk. It's also important to stay on top of market news and developments, so that you can adjust your strategy as needed. And it's important to remember that investing involves taking on some level of risk. You should never invest money that you can't afford to lose, and you should always be aware of the potential risks of any investment. This is especially true when investing in risky assets, such as cryptocurrencies. It's important to be aware of the potential risks, and only invest what you are comfortable with. It's also important to consider the fees associated with investments. Finally, it's a good idea to diversify your investments. It's generally not wise to put all of your eggs into one basket, as this can expose you to greater risk. Investing in different asset classes can help to reduce your overall risk and increase your chances of achieving your financial goals. In conclusion, the downfall of Bitcoin has been significant in recent years, but there are still plenty of investment opportunities out there. It's important to do your research, understand the associated risks, and diversify your investments to ensure you have the best chance of success. Before investing, it's also important to set realistic financial goals. This will help you determine how much money to invest, how long you should hold it, and what type of investments are best suited to achieving those goals. Furthermore, you should always remember to remain disciplined and stick to your financial plan. Finally, it's a good idea to consult a financial advisor or tax professional to ensure you are making the right investment decisions. They can provide valuable insights and help you to avoid costly mistakes. In summary, the downfall of Bitcoin has led many to question where to invest their money. While there are no guarantees of success, by doing your research, diversifying your investments, and consulting the right professionals, you can increase your chances of achieving your financial goals. Beware of investing in scams or high-risk investments with the promise of quick returns. While these may seem appealing, they often lead to significant losses. Similarly, be cautious when investing in ecos and cryptocurrency projects, as these can be prone to fraud and manipulation. Finally, it's important to remember that investing is a long-term endeavor. Don't expect to get rich overnight. It takes time and patience to see the fruits of your labor. So, set realistic goals, stay disciplined, and be patient. That way, you can have the best chance of success with your investments. It's also important to remember that past performance is not always indicative of future results. Just because an investment has done well in the past doesn't mean it will continue to do so. Therefore, it's important to stay up to date on the latest developments and news related to your investments. Finally, when investing, it's important to stay focused on your long-term goals. Don't get caught up in the hype of the latest stock or cryptocurrency. Instead, focus on your goals and make sure the investments you make are aligned with those goals. It's also important to remember to take advantage of any tax breaks or incentives that are available. This can help to reduce your overall tax burden and maximize your returns. Additionally, if you're investing in a retirement account, you may be eligible for tax-deferred or tax-free growth. It's important to stay informed on how your investments are performing and to make sure you're on track to achieve your goals. It's also important to remember to set realistic expectations when investing. Finally, it's important to remember to practice good financial habits. This includes budgeting, saving, and keeping your debts to a minimum. In conclusion, the downfall of Bitcoin has led many to question where to invest their money. With the right research, diversification, tax planning, and financial habits, you can increase your chances of achieving your financial goals. Stay informed, be patient, and remain disciplined. Good luck.